I really want to know how the luxury market's doing, how that economy's doing, how rich people are feeling. Are they ready to go out there and start buying homes? I really want to hear what RH's guidance is. Does RH is going to tell us if rich people are ready to go out there and spend, or if rich people are really still like, nah, I'm not. I'm still, holding budgets tight right now. I think that's an important thing to kind of understand about the economy, right? Because when rich people start spending again, it's usually, I would say, a very bullish thing for the economy, because that means those rich people ultimately, they own assets, right? They might own many homes, many stocks, assets in general, right? And so when those folks feel like assets are going to start going up again, they're going to start going out there and spending, right? Because they feel comfortable with that. And so an RH company is a perfect one to pay attention to see what the rich are actually doing. Are they ready to go out there and spend? Start buying $5 million, $10 million, $2 million, $15 million homes again? Or are they kind of just, nah, I'm not really ready to spend, 6 figures to update my furniture in my house or buy a new house or something like that. So important company to pay attention to. Keep an eye on that one, folks, okay? Next stock I'm interested to just pay attention to this week is ELF. So ELF has been reaching new high after new high after new high, including another new high this past week. It ended on another new high. And for a stock like ELF, I'm just kind of keeping an eye on it because I'm like, when does this end? I mean, this stock just keeps going up and up and up and up and up. But I will say with ELF, the PE metrics are getting pushed now, okay? I mean, we're trading at about 47 forward PE for this company, right? Market in general trades at 20-ish forward PE. So we're well over double up what the market trades at on a forward PE basis. So we're getting very pushed. Now, the interesting thing in what causes a lot of confusion in regards to this, okay, I'll be quite honest, is check out the growth rates expected for this company. 13 analysts cover this stock, okay? 40% revenue growth. So the question is, what are you willing to pay for a company that is going to have their EPS go like this year, from 84 cents to $1.39 is what analysts believe. A company that's expected to, and they've actually beat a lot of analyst numbers over the years, right? Expected to have 40% plus revenue growth. What do you pay for a stock like that? The market in general, I mean, if you look at the average stock in the market, okay, the revenue growth of the average stock is like 3 to 5% usually, okay? So we got a company here that is going to grow potentially 10x the market revenue. So does it deserve 10x the valuation? Well, then in that case, it would be a 200 forward PE, right? I don't know if I would say that, but at the end of the day, that's the confusing part of a stock like this. And to add more confusion to the whole story is look at next year. Not nearly the EPS growth expected next year. We'll see what they guide at for next year and see what happens there. And then from revenue growth standpoint, 15% is pretty lackluster when you're coming off 40%. So that just adds an extra element of confusion with the stock like ELF. So I'm just kind of keeping an eye on it. Obviously, I own the stock. I'm about as happy of a shareholder as you can possibly be. But I do wonder how much this momentum can carry along for, okay? Somebody asked me, or they didn't ask me. Actually, there was a few people that have either asked me or suggested to me to sell ELF stock, okay? And like, you need to sell ELF stock. You're up huge on it, blah, 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 okay? And here's my perspective on this. The stock just keeps going higher. It seems like day after day after day after day after day after day, right? It's incredible, right? I will tell you this. Am I going to sell ELF stock? The answer to that is absolutely not, okay? Despite being up nearly 1,000% on the stock. Here's the deal with ELF, okay? And here's the deal, and this is a very important point I'm about to make for everybody. I don't care if you've been in the market for 10 years or 10 days, okay? As somebody who's been doing this for 15 years now, my biggest mistakes have always come from selling stocks and taking profits in companies that are far outperformers when it comes to their businesses, and their management teams do far better than expected. Those are always my biggest regrets. I'm always willing to deal with a loss on a stock, making a mistake. As a stock market investor, you're going to make mistakes. You're going to lose money sometimes. It's part of the process. It's part of the game. There's no way around that. It's like being a boxer and expecting not to get hit in the face. Like, you're going to get hit in the face, okay? So I'm accepting of that. But something that frustrates me is when I sell stocks and then I go on, and those stocks were great companies, so well run, amazing numbers, and I sold, and then those companies just continue to prosper and prosper over time. When you look a little deeper into ELF's numbers over time, you begin to get educated on why this stock just goes up and up and up and up. It's not like this stock just magically went up 1,000% for us. This is their latest Q3 results. Their net sales were up 49%. Who's putting up 49% growth in this environment right now? The only company I can think of off the top of my head that has better growth than that is Avant. It's the only company I can think of right now in this environment, right? 180 basis points. That's 1.8% gross margin improvement. It's an incredible number. 69% adjusted EBITDA up, right? So way outstripping net sales. It's incredible. But it's not just one quarter. Look at the past years for the stock. This is basically my whole life in the stock, essentially, right? 3%, 7%, 11%, 8%, 16%, 8%, 7%, 10%, 24%, 50%, 27%, 11%, 13%, 26%, 33%, 49% growth. 16 consecutive quarters of net sales growth for this company. They execute on the highest level possible. So why would I sell more shares of stock? I already sold most of my shares in the stock, a long time ago, and I regret it horribly. Horribly. You don't even know how many ELF shares I used to own back in the day. I could pile them up to the roof, okay? And I made a bunch of money in a very quick amount of time in the stock, and I sold, and I sold, and I sold, and I sold. And I regret every share I ever sold, okay? When you're in companies that are prime-time players, you don't cash those babies. You keep them. The problem a lot of us stock market investors get into is we make a bunch of money on a stock, sometimes in a quick amount of time, 6 months, 12 months, something. We see a company executing very well, and then we go ahead and sell, and sometimes we put that money into stocks that aren't good performers, right? And management teams aren't performing. And it's a huge mistake. And I made the mistake countless times over the past 15 years. And I'm going to make sure I don't make that mistake over the next 15 years. I can tell you that much. Now, shorts are not happy about a few stocks. And we got to talk about these stocks specifically. One is Coinbase, okay? If you have not been keeping track at home, Coinbase is up at roughly 150% this year. We're not even through 3 months this year. That's incredible, right? Like think about that for a moment. We're a little over 2.5 months into this year, and this baby is up 150%, right? Shorts are not happy about this. A lot of shorts have either been short selling the stock, buying short-term put options on the stock, hoping it goes down in some substantial way, right? Some that are dated out a few days, some that are dated out a few weeks, some that are dated out a few months, right? And this has to go down. This is ridiculous. This is rallying so much, okay? And I just don't understand why even it is worth somebody's time and attention to try to short stocks like this or buy put options. Because the bottom line is, you went into this year, this stock had already been kicked and kicked and kicked, okay? So you went into this year and the stock was already down, 80%, 90% from highs. So you're trying to squeeze the last few squeezes out of this lemon, okay? On the flip side of this, if you have any bullish momentum, it's going to be huge for Coinbase, right? What have we had so far this year? Some bullish momentum coming in Bitcoin. Guess what that helps? Coinbase. And the last component of this, I don't think a lot of these short sellers or folks consider, is let's say I wanted to go buy Bitcoin and Ethereum, okay? Who am I going to do it with? Coinbase. Like, almost all their competition got eliminated. Like, who's Coinbase's competition? Binance? I don't even know if Binance, if we have one more major, let's call it a bear market in crypto, that maybe Binance is the next FTX, right? I'm not putting my money there. So now at this point in time, there's basically no competition for Coinbase. And so if an average person wants to go buy cryptos, right, they're more than likely going to set up a Coinbase account. And now they almost have like I don't want to say a monopoly, but because everybody went under, it's like now if you want to buy Bitcoin, Ethereum, and a bunch of other cryptos, you're more than likely going to go to Coinbase. And so that's an interesting dynamic there, that basically they're one of the only ones that actually survived this situation, maybe the only one that folks, at least in the United States, trust. That's an interesting situation there, right?